guess. There it is there. So sell side, the DRUG. It opened with a little pop to the upside, sold off, gave you a nice easy sell at $8.20, and it's traded down to $6.50. So pretty good. Pretty good. The other symbol that we've traded today is EYPT. We've bought and sold. And that's the advantage with having a stock that you can do short selling and buying, obviously, against. So selling the open after the initial surge to the downside, we sold on the test, failed auction. Started to see a bit of volume getting absorbed in here, so we thought this is probably going to go long. So we were ready to clear and go long. Managed to get a nice pop. Came back down, managed to buy some more. And small upside rotations at the moment. Don't look very impressive. But we're not going to lose any money on EYPT. But the big winner for us this morning is ticker symbol DRUG. DRUG. We're making a lot of money on treasuries. Sell side business today, guys. We chatted about this a while ago. And this is turning out to be a bit of a monster for us. I was not expecting this morning, to be honest. But hey ho, we'll take it, right? So this is where we are at with treasuries today. You can see that it's tearing off to the downside. We talked about this sell trade for us this morning, and as I said, I'm just a little bit surprised that we got quite so much money out of this bad boy, but there you go. It is what it is. Looking at it from a durational point of view from equities, one of the things you're able to recognize is that the equity duration was lagging behind the break lower on bonds, giving you a very easy lagging signal on the short durational sell from equity. So get a nice little signal on that as it started to drift off the high prints, which is pretty good. If you look at it from an inflation point of view, this is the reason why we were selling this one actually this morning. So if you take a look at inflation break-evens, what do you think of it? Was it pretty clear that we were going to be selling it? What do you think? We did a class on this last week, didn't we, Kim, about inflation break-evens, that I said it was one of the most important lines you can have on your charts, because it really is dominated by simply the bond traders. It's not the outside guys. It's nothing to do with the outside markets as such, as a straightforward correlation. And you can see from the inflation break-evens, we're not just selling. We've really moved the needle on this one, haven't we? We're back to that drugs sell again, aren't we? So we've moved the needle a lot lower, and the sell into the higher prints, to me, seem to be the most obvious play here. And if we look in the background, we'll see that this has been relatively new and appearing. If we come off the 2-minute chart for a second, we go up into the 15-minute chart to try and get some context to this sell-off here. When we look at the context to the inflation break-evens in terms of the sell, it's not a new trade, is it, Mike? It's been selling all the way back to this prior high up here when we got the auction sell. Remember, this is the 10-year bond auction, and this is the 30-year bond auction. So we're way back on the 9th of November when the inflation break-even started to give us an awful lot of more upside business. Remember those two terrible auctions? Tell me you haven't forgotten about them already. So there was two tragically bad bond auctions a short while ago, which would have obviously have been dominating your thoughts pretty much every time you open up your desk on bonds every single day. You should probably be thinking about those terrible bond auctions, because they're not going to go away anytime soon, and especially when the bond hasn't actually sold off by that much since those auctions. So for me, it's still very much the case that we would be expecting that bond auction sell-off, and I don't see any reason why we can't be expecting the bonds to reach down into these lower lows. Now, according to inflation, we should actually be able to blow out this bottom edge here. You know what I mean? We should be able to blow out this bottom edge. And if we're actually if we're trying to trade this in terms in line with inflation break-evens, the last time inflation break-evens was trading down at these areas, the bond price was probably about where the purple line is just now. So that value is about accurate in terms of an anchored value. So we're probably going to be looking at 159 on the bond, which obviously gives us about $3,000 of downside room to make that sell-off stick. So I haven't seen anybody mention bonds this morning, so I'm hoping everybody's on the short bond with me. It's been a simple, like single trade for me at the present moment. Yes, there's been a couple of scalp opportunities to buy when it hit into the low prices, but the buys have been more exiting the shorts and then reselling back in for this macro sell trade here. So I'm assuming we've got some bond traders still trading bonds, but as I said, haven't seen anybody mentioning bonds this morning. But we've really had just the one trade in line with that massive inflation break-even storyline, and we have made a fortune. Nobody on bonds this morning. Well, one of the biggest moves we've had today.